is something we don't talk about a ton on the channel, but this is moving the market substantially. This is the dollar index, good old Dixie, okay? Now, what has been going on here essentially is the dollar has been going down, to put it quite simply. The dollar peaked in around the second week of October of 2022. And since then, it's basically been going down, 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 right? It's had a few bounce backs where it bounces back for a few weeks, but ultimately it just goes lower and lower and lower. Now, guess where the market bottomed? The market bottomed the second week of October. Isn't that fascinating? The exact moment that the dollar peaked, the stock market bottomed. Pretty much all the indexes actually bottomed all right around the same time. Now, this goes to show you, obviously, the dollar is very, very important to the stock market. And a dollar that is going down can be seen as like risk assets are going to go up, right? And vice versa. A dollar that's going up over time is going to put, I guess you can say, risk assets in a tougher place. Now, why is this? It's very important to understand why this is. There's a few different reasons, but one of the reasons is, especially for a lot of U.S. companies that do business international, is a dollar, let's call it being in a very elevated place, can actually hurt earnings significantly. And this is why over the past, I can say, year or so, you've heard a lot of companies talk about their earnings if FX was on a neutral basis, okay? And this is starting to be picked up by even obviously mainstream media. Reuters today put this out. Tumbling U.S. dollar is a boon to risk assets across the globe. Cooling U.S. inflation is accelerating a decline in the dollar, and risk assets around the world stand to benefit. The dollar is down at nearly 13% against a basket of currencies from last year's two-decade high. It's incredible, right? And stands at the lowest level in 15 months. Its decline quickened after the U.S. reported softer than expected inflation. So as inflation becomes less and less of a problem, we should continue to see the dollar go down. Now, keep in mind, if for any reason inflation was to start booming again or something, there's a potential that obviously the dollar could go up in that situation, and guess what would happen? Stocks will go down in that situation. The correlation is exact. I mean, it's almost scary how perfect it is. I mean, if you look at the dollar in 2022, that baby just went to the moon. In the exact moment the dollar started to go down, the stock market finally had hit a bottom and started to go up. And as far as the Qs, SP 500, the Dow is right around that time, Russell's right around the time. It's fascinating. But the riskier stocks are seen as really the ones that kind of bottomed all around that, let's call it mid-October to beginning of November timeframe. Absolutely incredible, right? I see opportunities in this market still at this point in time, okay? A lot of opportunities. And let me run you guys through some of those opportunities I see in this market right now, because there's several of them in different industries, different sectors, doing different things in their businesses. PayPal is a great example of a stock that just started its 2-year bull run, in my opinion. Just started. We're at the infant stage of kind of PayPal going on an epic run here now at this point in time. And so this is a stock that I look at, and the P is disgustingly undervalued. I think the growth is going to be much stronger than folks anticipate. Once a new CFO and CEO are announced, which I think they'll be able to bring in top-tier caliber talent, I think we're off to the races, and I think the stock will hit 100 pretty quickly, and then it's on its way to 150 after that. So we'll see what happens. I'm obviously placing my chips on the table, and we might come back to PayPal a little later on in this video. Another opportunity I see out there in the market is Wynn Resorts. Wynn Resorts is a stock that's trading a little over $100 a share. Now, when times are good at Wynn, the stock trades 200 plus. So a lot of people think like Wynn's done, like it's had its big move. No, you don't know Wynn stock very good. You don't know the history of Wynn stock. As somebody that's been a shareholder on and off of Wynn for, probably close to a decade now at this point in time, I can tell you Wynn goes through some epic ups and some epic downs. And it looks like it's on its way to doing another epic up move. And the reason is Macau's just started to come back. I mean, you see these Macau numbers, they're up hundreds of percent on a year-over-year basis. It looks like things are starting to come back in the right place. And so you got to understand what the stock like Wynn, if the economy stays decent, we don't need a booming economy. If the economy stays decent, Wynn's going to likely make a pretty epic run over this next 12 to 24 months. Vegas continues to be strong, right? And then if we talk on top of that, the strength in Macau and those properties all getting back to major profitability over this next few quarters, game changer for Wynn. Never mind once the excitement starts to build around, how big that opportunity could be in the property they're building in the Middle East right now. So that's a stock I look at, and in the gaming industry that I think is a pretty good opportunity out there, right? I see an opportunity in something like Cheesecake Factory, very undervalued stock here, right? I think it just started a nice move up to 60. We'll see what happens, obviously, over the next year or two. But this is one I think is one of the most underestimated stocks out there. I think it's the most underestimated kind of, let's call it, if we were to put it into the food category, the restaurant category, I think it's the most underestimated stock, the most disrespected stock in the space, and I think that's going to change in a pretty epic way over the next year or two. We'll see what happens, but that's an area I see opportunities, right? Price wars in the auto industry equals coming bankruptcies. Exhibit 101, that people don't want to buy EVs. Ford just cut the price on its pretty amazing F-150 Lightning EV truck to $51,999 from $61,000 as of yesterday. A 16% effective immediately cut. This is not normal, okay? Gordon Johnson says people do not want EVs, okay? That's what he is claiming. All right, so let's fact check Mr. Johnson while our camera magically switches here, okay? And what do we find? Well, Tesla, the EV company, let's see. So they 10x revenue here, then they 10x their revenue again, and now they just 4x their revenue, and over the next couple years here, it's going to be 10x again, because then they're going to be doing $200 billion plus of annual revenues. So we look like a 10x, 10x, 10x. All right, Gordon Johnson, I don't know what you're talking about, but clearly Tesla has no problem selling EVs. They seem to be doing just fine. What about recently? Well, they just crushed delivery expectations. 466,000 EVs they just delivered. I believe that was 80+% growth on a year-over-year basis. Gordon Johnson, whatever you're saying here, it doesn't hold weight. That's just a fact. It doesn't hold weight based upon what's going on with Tesla and EVs in general. And by the way, EV market share just hit a new record this past quarter. If I recall, over 7% of the vehicles sold were EVs, okay? And wait to see that number in 3 years from now, 5 years from now, 7 years from now. So the whole people don't want EVs, it just doesn't hold weight whatsoever. The equivalent of what Gordon Johnson just said is like saying, TCL has trouble selling smartphones, so people don't want smartphones, clearly, because look at TCL, like they're having trouble selling smartphones, okay? If other brands have trouble moving units and they drop price or whatever they do, okay, at the end of the day, doesn't mean at all people don't want Teslas, okay? Just because people aren't buying a TCL smartphone or a Lenovo doesn't mean they don't want an Apple smartphone, okay? That's the bottom line in regards to this. And what does the market think about all this? Well, the market clearly is not worried at all about what Gordon Johnson has to say, okay? Because then again, if the market was worried about what Gordon Johnson has to say, they would have been worried 5 years ago and plus many years before that, because Gordon Johnson's been bearish on the stock for literally as long as I can remember. So a minimum of 5 years, but probably longer. And he's missed out on the last 1,000% plus gain, if not 2,000+% gain in the stock. And it is what it is. Today we're up another $15,000 on good old Tesla Maestro. So Tesla just keeps rolling on through to earnings.